So we just recorded like a whole video and I didn't realize that the microphone wasn't recording on the computer. So I have to redo this whole thing. Kind of a bummer, but I'm pretty sure it's recording now. Hopefully you guys can hear me. So let's just dive into this. My name is Ale. Welcome to my world of stocks. This is probably my favorite series on the channel that we do here. We talk about three specific topics in these videos. We cover the current state of the economy and the stock market on a more kind of macro level, and I give you my opinion on everything that's going on. Topic number two that we cover, we talk about what stocks I bought and sold over the past month, which was November 2020, and I actually bought three brand new stocks last month, which is pretty rare. I never really do that, so you don't want to miss that. That's going to be a lot of fun. And then topic number three, we cover what stocks I'm thinking about buying or selling in this month here in December 2020. Now, I know I'm a little late to this. I really like to do these videos at the start of the month, not like midway through it. But I've just been super busy lately. I'm actually moving to a new place. I'm trying to basically design out like a whole studio for YouTube. So I've got some really big plans coming for the channel. 2021 is going to be a crazy year, a lot more videos, and we're going to do live streams, and I have a lot of really fun ideas for the channel. So please just hang in there, guys. I know I haven't been uploading a lot, but there's big things coming for the channel. I promise. Okay, now with all of that out of the way, we got a lot to cover. So let's dive straight into this and let's cover topic number one, the current state of the stock market and the economy. And as has been the case for most of the second half of this year, the markets continue to trade very high. The S&P 500 is up over 13% year to date and currently sit near an all-time high after surging over 80% in the past 5 years. The Dow Jones is more reasonable, only up about 5% year to date, but is still trading near an all-time high and is up over 70% in the past 5 years. And the best performing of the bunch is the tech-heavy Nasdaq that, in my opinion, has greatly benefited from the pepperoni lockdowns that have really destroyed small and local businesses and in turn basically transferred wealth over to giant corporations that we've all become reliant on, leaving the index up close to 40% this year while it sits near an all-time high after climbing by over 150% in the past 5 years alone. Needless to say, valuations are pretty high right now. The S&P 500 PE ratio is sitting at over 37 at the moment, which is much higher than the typical average, although to be fair, this is using trailing earnings from a horrible recession, so as the economy improves, that valuation could theoretically be much lower, but it's still hard to ignore that we're currently sitting at more than double the median and mean PE ratios of the market's recorded history. So having said all of that, it's important to look at the economy and see what kind of progress we're making on our recovery. Well, unemployment numbers recently came in for November, and it does look like the steep downward trend is continuing after having maybe the sharpest spike in history, leaving us now down at around the same point we were at back in 2014. So not too horrible there, but we definitely still have a ways to go if we ever want to reach the great lows that we had before the global health crisis started. In the short term though, the recovery is clearly slowing down. Cases of the pepperoni have been rising, as you can see on this map here. The sort of like maroon colored states there are the ones where cases are going up, and that's convinced many politicians to lock right back down. Here's the same map showing states locking down in the same maroon color, and it's not looking too pretty. As you can see that most states are actually increasing their restrictions, which does negatively affect the economy. So if we zoom into continuing unemployment claims by week, meaning how many people are still on unemployment insurance, last week saw the first increase in many weeks, completely stopping the recovery there, and we really just now started increasing the lockdowns, so we probably won't see the full effects of them until a couple more weeks from now. On the more optimistic side of things though, V-shots for the pepperoni are definitely on their way, and once they arrive, the hope is that politicians won't have too many more reasons for shutting things down, which I think would really add some fuel to the economic recovery. The FDA has already approved Pfizer's V-shot for emergency use, with millions of doses already being shipped, and I believe Moderna will be going through the same process sometime later this week. And of course, there's still the possibility that we also get some more stimulus passed soon, although that continues to be heavily debated, but more stimulus would obviously be welcomed greatly by the markets. By the way, I know that there's a lot of like controversy and drama going on right now with the presidential election, but I don't really want to comment on that too much just because I do feel like the news on that changes literally every single day. And a lot of it is kind of speculation as to what's going to happen. So I'm just going to wait and see how it all plays out. Uh, that's not to say that it's not a big deal. Of course, we also have the runoff election in January for the Senate, and that could decide whether Democrats gain full control of the government and they can push through big policy changes that could impact the economy, which would impact the stock market and could lead to some uncertainty there. But no matter who takes control, regardless of what side they're on, I'm just hoping that they do a good job. And long term, I just try to be optimistic. But right now, giving any kind of comments on the political environment that we're in, a lot of it would be speculation and there wouldn't be a lot of substance to it. So I'm just going to take the wait and see approach and we'll see how it plays out. But I'll be sure to give you guys updates if anything big changes. Anyway, with that said, here in the short term, the economy and the stock market, in my opinion, continues to be a mixed bag. And I'm hopeful that the economy will continue to recover. But at the same time, I do feel like the stock market is trading a bit too high right now. So I'm still buying stocks. My strategy has been to continue buying stocks, and I've been doing so kind of slowly in relatively small amounts. But I'm also putting a good portion of my monthly income into the cash portion of my portfolio so that I do have some reserves there in case the market was to dip or go through any kind of correction, then I can jump in and do some much heavier buying. So with that in mind, this past month I actually did quite a bit of buying in November, which is maybe a little surprising, but I just felt that there were some good deals out there. So I picked up 3 brand new stocks. 2 of them were biotechs, and I did feel like there were some good deals in the biotech sector. And then one was a brand new dividend stock that I also felt was a good value. And then I did buy a 4th stock, but that was a stock that I already own, and it was a dividend stock, and I just kind of added to my position. So let's just quickly run through that list. And first up here, starting with the 2 biotechs, I went ahead and bought some Pfizer, ticker symbol PFE, which is a pretty obvious buy given all their V-shot progress. But this is a biotech that has been kind of all over the place in recent years, with even this year in 2020 being super volatile, despite their strong success in developing a V-shot for the pepperoni. But I did go ahead and pick up some shares here on several different days in November, with the last one being at around $36 a share, which I think is a fantastic price given that the stock has already climbed significantly from that. I'm not sure if I'll be picking up more shares here in December since the stock has already climbed a bit, but if it was to dip back down again, I'd definitely be willing to pick up more shares just because that dividend yield is still above 3% even at these higher levels, and the valuation is still very attractive at around 40% cheaper than the sector. And while their financial growth has been stagnant in recent years, I'm guessing that the pepperoni shot will probably bring in like tens of billions of dollars for them over the coming years. And all the meanwhile, they've been building up a gigantic pipeline of around 90 different projects. So long term, this is definitely a stock that I want to hold on to. Now, the other brand new biotech that I picked up is much more risky, and I do consider them to be a bit more speculative, but I still like them long term, and that's Illumina, ticker symbol ILMN. And I did keep my purchase pretty low at less than 1% of my portfolio, but I kind of regret not buying more just because the stock has already climbed a bit. They're currently trading for around $340 a share, but I picked mine up at closer to 300, so I'm up around 13% already on my position. It's definitely not a cheap stock with a forward P ratio of over 50, but the reason I want to hold this one long term is because I do think that the DNA sequencing market will see explosive growth in the future, since DNA sequencing can be used to solve really important health problems related to things like cancer cell mutations and genetic diseases, and Illumina just so happens to be the market share leader in that over 90% of all the sequencing data in the entire world is actually generated from Illumina systems. It's a volatile stock, and I don't think I'll be buying more unless it dips back down again, but long term, I do have high hopes for this one. And then finally, the last brand new stock that I did pick up in November was not a biotech, but it is a very nice dividend stock, and that was Verizon, ticker symbol VZ. And like the others, I'm in the very early stages of buying this stock, and luckily it hasn't really jumped much at all, so I'll probably be able to buy more even right here in December. The stock is currently trading for around $60 a share, up only around 35% in the past 5 years, which have been very bumpy without a lot of growth. And this is basically where I went ahead and bought some shares right around this price right here. The reason I did is pretty simple. It's not the stock price growth that I'm actually interested in, but rather the dividend that currently yields over 4%. We could probably go back and forth on whether Verizon is a good investment, but right here does look like an attractive entry point for me since the valuation is around 30% cheaper than the sector. Their cash flows are very high, especially in recent years, which does make me think that the dividend isn't going anywhere. And there's still some growth opportunities out there, like in fiber internet, where they added almost another 140,000 subs last quarter. And of course, in wireless telco, where Verizon does hold the most market share at over 40%. They have the fastest 5G network according to Fortune, and they're quickly scaling up their fastest ultra wideband service, as you can see on this chart here. Add it all up, and I think I might want to buy some more shares of Verizon here in December, and especially if the stock dips even more. But speaking of Verizon, I'll just mention the only stock that I added to an already existing position of here in November, and it's no surprise that was AT&T yet again, which is probably a stock that you're all sick of hearing about since I've been buying them a lot in recent months. But this last purchase was for around $28 a share, and as I've always said about AT&T, I really think that anything under 30 is a great price since the dividend would yield over 7%. Unfortunately, the stock has already climbed back up to about $31 over the past month, but even here the valuation is over 40% cheaper than the sector on a non-GAAP basis, and the dividend still yields over 6.7%. But I've just done so much buying of AT&T that at this point, with a fairly large position at a very low cost basis and a very high dividend yield, I just feel like I'm tapped out. I just don't have the urge to be buying any more AT&T stocks. So I don't think I'll be buying here in December unless it was to dip. Anyway, those are the stocks that I went ahead and purchased in November. Let's move on now to the final topic of the video, and that is what stocks am I kind of thinking about buying or selling here in December? Now, I don't really see as many good deals here as there were last month, although I do still think that there are some opportunities with biotechs, and there's some that also pay some very large dividends. And I would also love to be buying some more Verizon, speaking of dividends. So there could be some buys in those kind of areas, but I already talked a little bit about that. The only other area where I think maybe we see some buying opportunities here in the kind of short term would be possibly in big tech, because there is a lot of growing pressure right now to break up some of these big tech companies, and that could lead to some great buying opportunities if they were to dip because of that kind of uncertainty. According to this article from The Guardian, the US government is attempting to break up Facebook, citing that they did this before in the 1840s with logging companies, the 1910s with Standard Oil, and the 1980s with AT&T. So now it's time to take on big tech. And with that, this past week, the government filed an antitrust lawsuit against Facebook that will aim to break up the monopolistic social media giant. However, it also comes off the heels of a similar case against Google, as well as a congressional report that recommends taking apart Apple and Amazon alongside the other two. The case alleges that Facebook CEO Mark Zuckerberg and his colleagues conspired to monopolize the social media space by buying rivals and stifling competition, with evidence showing up in email conversations exchanged between them, although some are skeptic that anything will actually be done. Still, breaking up big tech seems to be becoming more and more of a bipartisan issue, which in the year 2020, anything that can kind of bring both sides of the political spectrum together maybe just what this country needs, and that could actually lead to some real progress being made. Still, as serious as these allegations are, none of it really surprises me, even in the slightest. Giant corporations always use acquisitions to basically buy their growth, as is clearly evident in Facebook buying Instagram and WhatsApp, or Google buying YouTube, just to name a few. But there's no question that right now these stocks are priced as if there's like literally no speed bumps on the road, so any kind of breakup concerns that lead to uncertainty could actually lead to some very nice dips if the lawsuits or the legislation gain steam. Keep in mind, these stocks are really high. Facebook jumped over 30% this year, leaving it up about 170% over the past 5 years. Google saw similar performance, jumping over 30% this year and is up over 140% in the past 5 years. Amazon jumped the most this year at almost 70%, leaving them up pretty close to 400% over the past 5 years. And Apple surprisingly had also a gigantic year, jumping over 66% in 2020, leaving them now up over 330% in the past 5 years. All of them are basically trading at all-time highs, so any kind of dips from here I think would be great relief to anyone that has been looking for a chance to jump into any of these stocks, which I think would be a great idea, because no matter how you look at this whole kind of big tech breakup issue, I just can't really see a scenario where owning any of these stocks would be a bad strategy. If you already own these companies and they were to break up, I think you're just going to be left with a ton of great options, because I don't really see any weaknesses in any of these companies' businesses. When you look at Amazon, if they were to split up, say, their online sales and their cloud computing business, and that's like two separate stocks, whatever, you're left with two great stocks there. And the same goes with like Google and YouTube, or even in kind of sketchier situations like maybe Facebook and Instagram. Well, maybe you want the huge user base of Facebook, or maybe you prefer the huge growth of Instagram. You're just going to be left with more options as an investor. And that the same goes with if you don't already own the stocks. I mean, having the option to be able to buy YouTube as a stock or be able to buy Instagram as a stock, those are all great options. And of course, there's also the possibility that these companies don't even break up and all of this is just kind of noise. And if the stocks were to sell off because of it and you were to buy those dips and they end up not breaking up, then you bought them on sell-offs that weren't even warranted. And that's also a good strategy as a long-term investment. The only one that I'm not feeling too good about is Apple, because they've climbed by surprisingly large amounts, and I just don't think that they're as an exciting of a company as the others. I don't think they have as many like future growth prospects and as many things going on for them. So I probably wouldn't buy Apple myself, but when you're looking at Google, Amazon, Facebook, I think those would be great stocks to own. And if I can get them on any kind of dip, I will be buying those heavily here in the next, couple months. So I'll definitely keep updating you guys on anything that happens with this. But for example, Google is a stock that I've been wanting to own for a long time. If this gives me an opportunity to finally buy Google or even Facebook, I'm definitely going to take it. So anyway, those are the stocks that I think will be on my radar here in the short term. Unless, we have a market-wide kind of correction or dip, then maybe I buy some other stuff too. But these are all the things that are kind of going through my head right now and some of the moves I've been making. I hope you guys enjoyed the video. I hope you're enjoying the series. I hope you're enjoying the channel. Please hit the like button if you are. I really appreciate all the support, guys. I hope you're all doing well out there. I'll catch you in the next one. Take care. Bye-bye.